So good to have you join us today. Hello and welcome to the program. I'm Lee Ji-yoon in Seoul. Coming up on today's edition of Business Daily. Korea's on-year job growth in March hit a 15-month high thanks to the number of jobs added in the construction and retail sectors. Despite growing calls for a rate cut to boost domestic consumption, the Bank of Korea is expected to stand pat on its key rate when it holds its monetary policy meeting on Thursday. These stories and more coming right up. Korea's latest jobs report shows the month of March was more promising for workers. The number of jobs in the construction, retail, and healthcare sectors has grown significantly, pulling the unemployment rate for March down a bit. Our Oh Jung-hee starts us off.
Korea saw a surge in new jobs in March, posting its biggest on-year increase in 15 months. New data from Statistics Korea on Wednesday shows 26.2 million people were working last month. That's 466,000 more than last year, and an unemployment rate of 60.2%, which is the highest rate for March since 1997. Most of the new jobs were added in the construction sector as seasonal factors resulted in more orders. The retail and healthcare industries also saw an uptick in new workers. The manufacturing sector, however, continued to see losses, a trend that's continued for 9 straight months due to restructuring in key industries. The unemployment rate fell by 0.1 percentage points on year to 4.2%, and the rate for workers between 15 and 29 also saw a slight drop of 0.5 percentage points to 11.3%. Still, the youth unemployment rate for March is the second highest in 10 years. The number of people who gave up looking for work numbered 468,000, an increase of 36,000 on year and an all-time high for the month of March. Oh Jung-hee, Business Daily.
Risk management was the key word at April's meeting on household debt. Acting President Hwang Kyo-won chaired the meeting on Wednesday, while Finance Minister Yoo Il-ho was also there, along with the heads of research and financial institutions. The Ministry of Strategy and Finance said officials reviewed the current household debt status while examining risks faced by more vulnerable income groups. Finance Minister Yoo emphasized the importance of maintaining constant communication with the market and holding a consistent policy stance in order to reduce confusion and stabilizing the household debt load. Acting President Hwang also called for fundamental changes to risk management by strengthening the income base of households and establishing credit practices seen in advanced economies. Exports of Korea's ICT products rose for the 5th straight month in March. According to the Ministry of Trade, Industry and Energy, Korea shipped out roughly $16.1 billion worth of goods last month, up about 16% more than the same time last year. As a result, the country logged a trade surplus of about $7.5 billion in the sector. The ministry said this was largely led by the rising overseas demand of semiconductors, which surged to over 44% on year. By country, exports to China jumped nearly 16% to about $8.1 billion, followed by Vietnam and to the EU. On the other hand, shipments to the United States dipped by about 19% due to the decline in smartphone exports. Samsung Electronics has reclaimed its status as the #1 player in the global smartphone market. According to the data compiled by TrendForce, an industry tracker based in Taiwan, Samsung produced 80.1 million smartphones in the first quarter to account for 26.1% of the global smartphone market, the biggest share among its competitors. It's also a 7.6 percentage point increase from the quarter before. The Korean tech giant's rival Apple came in second with a 16.9% share of the global market. Samsung is set to release its brand new Galaxy S8 smartphone this month. And moving on to markets, to give us a brief picture of this week's stock market action, we have our Business Daily's markets contributor Choi Jin-seok joining us on the phone today. Hi, Jin-seok.
Thanks for having me.
All right, so how are things looking on today's market?
Both the Kospi and the Kosdaq market have been stuck in consolidation. The Kospi rose slightly by 0.2% to close at 2128.91, while the Kosdaq followed with a 0.03% downtick to close at 621.45. The Kospi market retreated to the 2120 level yesterday as foreign investors continued to sell shares on the market. The index fell below 2130 for the first time since March 13. Despite geopolitical risks related to North Korean issues, foreigners shifted their position to buy during today's session to lift the index. However, institutional investors who unloaded shares on the Kospi prevented the market from rising further. By sector, mobile carriers suffered losses despite robust earnings reports as presidential candidates announced pledges to reduce household communications expenses by abolishing the basic monthly mobile phone rate.
Now, it was good to see foreign investors returning to the Kospi market today despite geopolitical risks. So how are the trends in terms of foreign capital flows?
Right. Despite rising tensions between North Korea and the U.S., foreign investors in the Korean market haven't been much affected by geopolitical risks. The Korean government said today that although volatility in financial and foreign exchange markets has increased somewhat, the effects of geopolitical risks related to North Korea are still limited. Looking at the numbers, foreigners pulled out investment capital of more than 200 billion Korean won in the Korean equity market, but they injected about 350 billion Korean won in the fixed income market. The government also said experts in overseas markets do not think tensions will be elevated further.
And we're heading towards the end of the week. So what factors should investors take a closer look at?
Since the U.S. Treasury Department is expected to unveil a report on currency practices on April 15, experts have been saying investors need to be rather prudent throughout this week. However, some actually believe the department may even delay publishing the report. British financial firm Barclays said today that given the potential backlash from China and effects on the global economy and financial markets, the department is more likely to postpone the date of the release. Meanwhile, a top outside advisor to President Donald Trump, Stephen Schwarzman, chairman of Blackstone Group, also said the U.S. probably won't name China a currency manipulator in the report this month. Since expectations that Korea will be included on the list have recently been lowered significantly, such predictions can serve as a mitigating factor for concerns over rising tensions between the U.S. and China going forward. This has been Choi Jin-seok for Business Daily.
The response to the launch of Korea's first internet-only bank last week exceeded expectations. The number of sign-ups surpassed 100,000 in just a few days, causing existing banks to consider their own counter-proposals. Our Eunice Kim has more.
Korea's first web-only bank, K-Bank, officially launched last Monday. The consortium of companies led by KT Corporation are kicking off with some 250 billion won in initial capital. And there are already concerns funding could dry up fast. That's in part thanks to the enthused public reception. On the first day, the number of new sign-ups eclipsed the monthly average of 16 banks combined. It kept growing in the following hours, eventually exceeding the 100,000 mark in less than 3 full days. 7 out of 10 new registrants were either in their 30s or 40s, and many registered after work hours.
Day or night, weekend or holiday, our users have access to all of our banking services whenever they want.
The bank, which has 0 brick-and-mortar branches and runs entirely on the World Wide Web, has promised to pass on the savings by way of friendlier interest rates for savers and borrowers alike. As of Thursday, the bank had issued more than 90,000 debit cards, attracting 73 billion won in deposits. As for loans, more than 8,000 customers were approved for a combined sum of 41 billion won. Existing banks are closely monitoring the flurry to craft an appropriate response of their own. Kookmin and Shinhan banks are set to roll out more fluid business hours to serve their customers outside of the 9 to 4, while Uri Bank has already installed their automated teller stations.
Efforts are being made to increase profitability through more non-face-to-face services based on mobile or internet banking.
On interest rates, Uri Bank has launched a super package that offers up to 2% on time deposits and 2.2% on installment savings. Even so-called savings banks that typically deal with people with mid-tier credit scores with higher rates are offering more competitive interest rates. SBI Savings Bank is advertising a 1 percentage point discount from its representative loan product, while Welcome Savings Bank has same-day business loans of below 6%. And with a second direct bank in the pipeline for a June launch fronted by a very popular domestic chat brand, interest will continue to be on whether these new breed of banks will indeed shake up the industry for good. Eunice Kim, Business Daily.
Now, the Bank of Korea is scheduled to hold its monetary policy meeting tomorrow, and it'll also release its economic forecast for the year. For more on what to expect, our Kim Min-ji joins us in the studio today. Hi, Min-ji.
Hi, June.
All right, so it's widely expected that the central bank will stay pat on its key rate.
You're right. Most market watchers forecast the Bank of Korea will keep its rate steady for another month. The central bank has left its key rate unchanged at a record low of 1.25% since last June. And despite calls for a rate cut to prop up a slump in domestic consumption, the central bank has had little room to alter its monetary policy due to the sheer size of household debt at roughly $1.3 trillion and improvements in the U.S. economy.
It's likely that the central bank will stand pat throughout the year. Although the U.S. may raise rates 2 or 3 more times this year, the BOK is in an awkward position when it comes to raising rates because of Korea's household debt and slowing domestic consumption. The bank may have to raise rates next year if the U.S. overtakes Korea, as it might trigger a capital outflow.
Last month, the U.S. Federal Reserve raised its key rate by 1/4 percentage point to a target range of 0.75 to 1% and has signaled a few more rate hikes this year. But the Bank of Korea has emphasized that while movements in the U.S. are important factors, it will not mechanically raise rates just because the Fed is doing so. For now, it says it will maintain its current stance of monetary easing to support growth as inflationary pressures are not high.
And the Bank of Korea is also expected to revise its economic forecast for this year.
You're right. There's actually been more interest in that than the rate-setting meeting itself. Until the end of last month, there had been speculation that the central bank would downward revise the outlook, but things have changed. It currently has it at 2.5% for this year, and that's down 0.3 percentage points from its previous outlook last October. Some analysts say there may be a slight upward revision, which would be the first in exactly 3 years. This is because of the recent economic recovery momentum driven by strong export growth. If we look back on the government's assessment of the economy just yesterday, it said exports had been growing for 5 straight months and that the slump in consumption was slowly improving. Exports came to $48.9 billion in March, up 13.7% from a year earlier. The export figure is the highest in over 2 years. Retail sales also picked up 3.2% in February on month, while domestic card spending also rose 13.7% in March. Analysts say this is due in part to improved consumer sentiment after an ease in political uncertainties.
And I understand that this pickup in local exports has prompted other economic institutions to lift economic forecasts for Korea for this year.
You're right. The average growth outlook for this year among 10 foreign investment banks, which includes Barclays, Morgan Stanley, Nomura, stands at 2.5%. That was made at the end of March, and it's up 0.1 percentage point from its earlier forecast in late February. They said that a global economic recovery has led to a rebound in Korea's exports, adding that as a result, it's likely that production and facilities investment in the manufacturing sector will pick up. A local think tank also recently revised its growth estimate. The Korea Economic Research Institute raised it to 2.5% from 2.1%. Korea Development Bank is also expected to lift its forecast from 2.4% sometime this month.
But, of course, we can't rule out all the uncertainties that are surrounding the Korean economy. So are there any negative factors that could weigh on the economy from here on out?
So despite a slight pickup, domestic consumption is still slow, and Korea faces a slew of uncertainties from the two biggest trading partners, China and the U.S. China has been stepping up economic retaliation against Korea's ongoing deployment of THAAD, which is dealing a blow to the tourism industry and consumer goods market. The U.S. has signaled further trade protectionism, and the Korea-U.S. free trade deal could be subject to renegotiation. But that's not all. The U.S. Treasury Department is due to release its report on currency practices of trading partners soon. There's growing concern over possible provocations by North Korea, and corporate restructuring in the shipbuilding industry is also ongoing.
Although export growth is picking up, it's hard to say that the overall economy is back on track because of that single factor. Besides, spending is still weak. It's also unclear to what extent China will continue its retaliation, and uncertainties linger from Trump's economic policies.
The Korean government has also been cautious, saying that while the country is showing signs of recovery, it will have to look at the economic data from March and April to determine whether Korea can maintain this momentum. As a result, experts say it's crucial that the new government show leadership once it comes into office in May in order to carry out effective measures and prop up stagnant growth.
So I guess we'll have to keep a close watch on whether this recovery momentum will actually last, right?
That's right.
All right. Thank you so much for coming in today.
Thank you.
The United States is raising its anti-dumping duties on imported oil and gas pipes from Korea. The Department of Commerce decided on Tuesday to raise its tariffs on oil country tubular goods imported from Korean steelmakers to nearly 25%. The move comes after the White House National Trade Council requested a hike in anti-dumping duties on Korean goods last month. Peter Navarro, who headed the council at the time, cited particular market situations as the basis for the proposed hike and the tariff margins. Toshiba's future is at risk as the firm's disastrous foray into nuclear power may have taken its toll. As it filed a delayed financial report on Tuesday, the Japanese company said in a statement that there are various material events and conditions that raise substantial doubt about the company's ability to continue as a going concern. One of the biggest hits to the firm are losses linked to its troubled U.S. nuclear power subsidiary Westinghouse Electric, which filed for bankruptcy late last month. For the April to December period, Toshiba reported a loss of 532 billion yen or $4.8 billion US dollars. However, the results are yet to be approved by the firm's auditors, and the possibility of the company being delisted from the Tokyo Stock Exchange is rising. Tax revenue from speculative businesses like casinos, lotteries, and horse racing are said to be in the billions of dollars. According to analysis by Korea Taxpayers Association, total taxes from the gambling sector accumulated between 2000 and 2015 came to 62.5 trillion won. That's about 54.6 billion US dollars. The sum collected in 2015 had grown by about 4 times from what it was 15 years earlier. The biggest chunk came from horse racing at more than 37%, followed by lotteries and casinos. Casinos only contributed some 12% of overall speculative tax revenue. Once monopolized by major industrial brewers, Korea's beer market is undergoing a noticeable change. Craft beers with unique flavors are quenching the thirst of a growing number of local beer drinkers. Take a look.
At this craft beer pub in Seoul, when a person orders a beer, the bar staff reach up to get draft beer from the dispenser. The pub's signature menu item is a beer sampler of 4 craft beer brews, including a Hefeweizen, with over 50% of its malt derived from malted wheat and a stout with delicate coffee aroma. Many patrons come just for these unique craft brews.
I heard this place had good beer. The ambiance is good and the beers here taste great, so I keep coming back.
The pub's beers all are brewed at the brewery in the basement. Craft beer refers to beer made by small, independent local brewers using their own recipes. Its flavors vary broadly from light and fruity to dark and heavy, based on the variety of ingredients used.
We at Steindorf only use ingredients specified by the German beer purity law, namely malt, hops, water, and yeast, to make craft brews with different flavors and tastes.
Beer is the most popular alcoholic beverage in Korea. As the preferences of beer drinkers diversify, the local beer market is changing. This is a small-scale brewery producing craft beers. It features 15 craft brews, from a classic European-style lager, a sour ale made with lactobacillus from kimchi, to a red ale inspired by sujeongwa, a traditional Korean drink.
I've just added hops, one of the key ingredients in beer. They add a bitter flavor and rich aroma to beer.
In the past, microbrewers were only allowed to sell their offerings within their breweries. Then, a 2014 amendment to the Liquor Tax Act legalized the external retail of craft brews. Beers produced here are supplied to some 400 pubs and hotels nationwide.
We are seeing continued growth in orders. They have grown by 50% compared to last year. At the moment, our products are supplied to only restaurants and pubs due to regulations. But once distribution channels are open, we plan to supply to retail stores and convenience stores as well.
Korean beers available at supermarkets or convenience stores are made by 3 massive industrial brewers with not much diversity in flavor. While Korean brews have failed to meet consumers' diversified preferences, imports of foreign beer brands have hit a record high every year. On January 27th, the Korean government decided to allow for the sales of craft brews in retail stores in a bid to boost the beer market.
The external retail of craft brews was allowed in 2014, but their sales were still banned in places like supermarkets and convenience stores that are easily accessible to consumers. But now they're allowed with the government's latest measure to boost the beer market. This has made craft brews easily accessible to consumers.
This craft brewery in Seoul allows visitors to brew their own beer. The place draws people from all walks of life, from hobbyist brewers to aspiring pub owners.
I'm a huge fan of beer. I wanted to try home brewing, so I came here to learn about it. I want to brew and try new flavors.
Beer brewing classes offered by the brewery vary in length and ingredients depending on the knowledge level of attendees. Novices use a starter kit that includes a can of extract to make their own beer in just 30 minutes. The classes are useful for those who want to get into home beer brewing but does not have the right place or equipment. After a week of fermentation, people can enjoy the taste of their own beer made at the brewery.
Now I'm confident that I can make my own beer at home. It shouldn't be that hard.
Once reserved for small pubs, craft brews are now pleasing the palates of many Korean beer lovers thanks to eased retail regulations. Many challenges lie ahead to level the playing field for small craft brewers, including the current tax scheme that is favorable to big brewers' mass-produced offerings and a lack of distribution channels.
Korea has a smaller number of beer brands and varieties than other countries. This is why we need a system to encourage research, to develop different types of beers, protect craft brewers, and help them grow. At the same time, we need to step up our efforts to train relevant professionals and invest in R&D.
While there is still a long way to go before craft brews reach a wider audience, it will be interesting to watch whether they can become a driving force in the Korean beer market against all odds.
And that wraps it up for today. Thanks for watching. We'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.